In 2025, the crypto landscape is still buzzing, but many investors are making the same mistakes that have plagued the market for years. Let's dive into the biggest pitfalls and how you can steer clear of them. First up, buying at the top. It's tempting to jump in when prices are soaring, but this often leads to regret. Remember, the market is cyclical. Instead of chasing highs, consider dollar cost averaging. This strategy allows you to invest a fixed amount regularly, smoothing out the volatility over time. Next, ignoring gas fees can be a costly oversight. Every transaction you make incurs fees, especially on networks like Ethereum. These costs can eat into your profits, so always factor them into your investment decisions. Use tools to estimate these fees before executing trades. Research is crucial. Many investors dive into projects without understanding the fundamentals. Look beyond the hype, read white papers, check the team behind the project, and assess the community. A little due diligence can save you from investing in a project that's destined to fail. Overleveraging is another common mistake. While it can amplify gains, it can just as easily magnify losses. Stick to what you can afford to lose. Use leverage cautiously and always have a risk management strategy in place. Leaving your crypto on exchanges is like leaving cash on the table. Exchanges can be hacked or go bankrupt. Use hardware wallets or secure software wallets to store your assets safely. Your crypto is your responsibility. Take the necessary precautions. Scams are rampant in the crypto world. Whether it's phishing attempts or Ponzi schemes, always be skeptical of offers that seem too good to be true. Verify sources and never share your private keys. Protect your investments by staying informed about common scams. Not taking profits is a mistake many make. It's easy to get caught up in the excitement of rising prices, but remember to lock in gains. Set profit-taking strategies and stick to them. This way, you can enjoy the fruits of your labor instead of watching your profits evaporate. FOMO and panic selling can lead to disastrous decisions. When you see prices dropping, resist the urge to sell in a frenzy. Instead, assess the situation. Is it a temporary dip or is there a fundamental issue? Keep your emotions in check and stick to your investment plan. Finally, getting too many coins can dilute your focus. It's better to have a few well-researched investments than a portfolio filled with random assets. Concentrate on quality over quantity. This allows you to track your investments more effectively and make informed decisions. And let's not forget about tax implications. Crypto trading can have significant tax consequences. Keep accurate records of your transactions and consult with a tax professional to ensure compliance. Understanding your tax obligations can save you from unexpected liabilities down the line. By avoiding these common mistakes, you can navigate the crypto market more effectively. Stay informed, be disciplined, and remember that patience is key. The crypto world is full of opportunities, but it's up to you to seize them wisely.